Hey, listeners, welcome back to the ValueHunt podcast. And today I'm really happy to be here with Andreas Aaen. He works for Symmetry, a Danish investment fund, and they have an amazing track record. You can check it out for yourself. We are not here to talk specifically about Symmetry, but rather one of their most recent reports, actually about a Portuguese company called CTT. So, yeah. Andreas, why don't you say a couple of words before I ask the hard questions?
Yeah, sure. Yeah, so thanks for having me on this podcast. My name is Andreas. I'm from Denmark, and I'm the CIO of investment fund called Symmetry Invest. Founded 12 years ago now, and have compounded capital at 17% per year net of fees. Run a traditional long-short model focus on European smaller mid-cap names. So yeah, CTT is a perfect fit within that portfolio.
Nice, interesting. So, yeah, just before we dive into the more specific questions about CTT and all that, I'm curious to know, what was your journey to get where you are today, like working at Symmetry? And I bet, it's not like in Denmark, there are a lot of funds that are really high quality and that do value investing. So, yeah, how did you position yourself to kind of, where you are today?
Yeah, I'm actually an accountant from education. So I started after high school working as an accountant, took my, accounting degrees at the university at the same time. But then I actually started posting, stock research on this different message boards, like in Denmark before Facebook existed, there was a different message boards, and then a few people, a lot of the ideas I posted went really, really well. And then a few people reached out to me and said like, "Oh, you're really good at this. Can you, manage my money?" And then I said, "No, I cannot. I don't have a fund." But, then in early 2013, I started the fund basically as a part-time project with some family money and a few original investors. And then, there were more and more people reaching out. And then in early 15, I got the license from the FSA in Denmark, so I could start marketing the fund. And then I quit my job and went full time. And that has basically been the journey since. Slowly raising the AUM so that today we are a little more than 100 million euro.
Nice. That's pretty cool. Probably we should do another episode just on that because I'm pretty curious. But since we have a lot of questions on CTT and we don't want to run this interview for like 3 hours, let's go into those questions first, and then maybe we can come back to this topic. So CTT is a pretty interesting company. Obviously, I'm from Portugal, so I know them from a customer's point of view. But for our listeners that might not be familiar with CTT, could you briefly explain what they do and what has been their transformational journey to what they are today and why it's interesting for Symmetry?
Yeah, sure. Yeah, so we started actually looking at CTT, I think it was 4 years ago. My partner Henrik was pitched the name by a fellow fund manager he talks to. And at that point, we liked the thesis, but there was a lot of legacy things. Most of the profits came from the legacy mail business. The new bank and the express parcels business was still unprofitable. So, we did some research, but decided to, not invest at that point. But then we kept following the name. We can kind of see how the new CEO and the new board started to kind of slowly build this, what I call the new co, the CTT version 2. So I think it was mid 2023 that we started to slowly build a position. Then Henrik went to Lisbon to visit the company in the end of 2023. Had actually a few full days there visiting the logistics centers, talking to management, seeing the properties, basically, full dive in. And we, basically slowly added more shares since then. And then in December after we'll probably get into this, but they announced 2 quite transformative M&A deals. And at that point, the stock didn't really move much. So we decided to basically double down on the position so that today it's one of our biggest positions. So basically the CTT as today is split into 4 business areas. So they have the legacy mail business. That's still close to half the revenue, but it's only barely profitable. So it's only like a small % of the profits. Then the by far most important segment is the express parcels business. So basically where they help the e-commerce players to deliver the parcels to the doors, handle logistics, everything attached to that. And then they have the retail bank in Portugal that you probably know, that has been the fastest growing retail bank in Portugal over the last 7-8 years. So they have went from basically nothing to quite a high market share, basically because of the CTT brand. And then really start to like monetize that now. And then the last business is the financial service segment where most of the profit comes from basically public debt placements.
Nice. Yeah. I think for people looking at it the first time, it might not be the simplest business model to understand because they have so many moving parts and all that. But if you had to summarize what their destination is for all this transformation, how would you do that?
Yeah, so the destination, I think the two recent M&A deals they did here in December is a really big catalyst for kind of getting closer to the destination. And that was one of the reasons we also bought a lot more, because what that basically does is they double down on the express parcels business. That is the one we really like. So the CEO, he basically said he inherited the bank when he came in as CEO. And, so they want to slowly sell down. They sold a 9% stake in the bank already to one of the insurance partners. And basically they have communicated that they want to sell down to below 50% ownership in the bank so that they can deconsolidate it. And then, of course, the mail business will slowly go away basically over the next 20 years or whatever. So really the end point is the express parcels business. And the two recent deals they did, they basically will double the profits in that business within the next 2 years. So that would be like 70-80% of the profits within the next 2 years. So it will really transform the business to become a pure, logistics player in Iberia.
Nice. Yeah. So I think the only part we need for having let's say more of a global picture of CTT, at least for someone that is looking at it for the first time, is what could impair them from getting to that destination. So we already have like the good side of things. So tell us how it can go wrong.
Yeah. So I think they have really established themselves well in Portugal. I think more than 50% market share there. So I'm not too worried about that one. In Spain, they still are, one of the upcomers. So they're still taking market share there. They went from basically 1% to 7%. And now with the DHL business, they will go to 15%. So they're still not the market leader in Spain. So that's still a market where something could go wrong, where they're not destined to win, but where at least they are on the right trajectory to win the market. So that is a, risk. Then of course the mail segment, the legacy mail segment is still somehow a risk. They have really good government contract now where they can basically offset any volume declines with price increases so that they can make sure to make a small profit. But that's not guaranteed in the future if there will be further and further erosion in the mail volume. And also there is some fixed cost that's split between the parcels and the mail business. So basically if the mail business declines even faster than I expect, then that could burden the express and parcels business a little bit. But that would be the two main risks I see.
Got it. Interesting. So I think we now have the full picture and we can dive a little bit deeper into each and every aspect of the thesis.
Sure.
Starting with like the free cash flow for the last quarter.
Yeah.
Like I saw that was negative, and I bet there's a good explanation for that. So why don't you guide us through what kind of made that happen?
Sure. Yeah, so the free cash flow was like they had some VAT payables, some timing, and then some receivables timing. So they basically also told on the conference call that money was paid in Q4, so they would have a really good Q4 on the free cash flow level. And they said on a full year basis that we should assume the same free cash flow conversion as in prior years. But it will always be quite volatile, the free cash flow, because they have the bank, they have this financial services segment where they put money out and receive it at another point. And so investors should be a little not too focused on quarterly free cash flows because it will be a little volatile still.
Nice. So my next question would be more on how to assess CTT, because obviously you have the bank that might always like mud a bit the picture because of the balance sheet and all that. So in general, how would you assess their performance like over time? Is there any preferred metric, or do you go specific into each segment and see how they develop and so on?
Yeah, I think we value them basically on segment by segment basis. So if your listeners read our research report, we basically do a sum of the parts where we take each 4 segments as a standalone, and then value those independently. Also, because even just within each segment, there's a lot of moving parts, especially with the new M&A deals, with kind of how minority interests should be treated and those things. I think that's definitely the best approach investors can have. And then, of course, it's up to the board over time to kind of simplify the business. I think that's something that both the CEO and some of the board members we have talked to has as a big goal. The first step will, of course, be to sell a lot of the real estate. They always started with that. Sell down the bank to below 50 so that it can deconsolidate that. And then, of course, this new DHL deal also complicates things a little bit, even if it's highly lucrative. So I think there is, still a lot of things they can do to simplify the business, but yeah.
Okay, got it. And like you talked about the board, and I just got reminded also of some very interesting part of this thesis, which is the shareholding of Greenwood. Obviously, their value investing fund from the UK, if I'm not wrong. So, what part have they taken into transforming this company, and like? Do you feel like their shareholding is a plus for this thesis to play out?
Yeah, I think that's actually one of the things we really much like with CTT as well, is kind of both the board and then the main shareholders. There seems to be really big alignment between the main shareholders and the board to kind of, focus on shareholder value. That's not often the case in small caps, but here you basically have the 3 largest shareholders that have, I think, together 3 board members as well, including Stephen Wood there from Greenwood Builders Fund. I think it's US-based Builders Fund. Okay. And then you have this, I probably can't pronounce it correctly, but this Manuel Champosing, I think it's a Portuguese investor that slowly built his stake, and he also have 2 board members. He was the one that actually installed the current CEO. So the current CEO, he started as representative of this shareholder in the board, and then when they took it into the board, they could see that they needed some changes, and he decided to step in as a CEO instead. And he's been really doing a really good job.
Yeah, I saw some of his interviews this morning in Portuguese, and I got a really good impression. Obviously, that should be taken with a grain of salt, because it doesn't really, you have to see for yourself and so on. But I know that the CEO is basically, on the executive position. Yeah. Commanded by the family that or basically the biggest shareholder, but himself, he has like some options that may align him, but at the moment as we stand, he doesn't have too much ownership of the company. So is that a going concern for you, or do you think that the options fully align him with the
I think that's definitely something the board is probably quite focused on, to make sure that, because you're right, the board of directors have huge inside ownership and really incentivized, but the C-level managers doesn't have a big equity ownership, but instead they have this the option programs that I talk around in my report. And I think the big one is that they have the 3 different levels of strike prices, and one is at €4, one is at €6, and one is at €8, and that expires the 1st of January 2026. So that at least with the next 12 months, they're highly incentivized to get the stock above 8, because that's the highest break.
Yeah, makes sense. And can that actually kind of make them go through short-termism decisions, because obviously they are incented to make the stock price go up until like 2026. They basically have a year to do so. So are you concerned with that, or you think like they are?
I don't really think they have a lot of levers to pull there to do anything irrational to short-term take the stock up, because the board is there to kind of govern them, and they won't do anything that can decrement the business in the long run. So I don't think that's risk. I just think it makes them extremely motivated to do everything in their power to improve the business.
Okay. Yeah, that's good. That's good. Nice. So now moving on to like their financial stability and all that. Obviously with the bank and so on, like do you feel their balance sheet is like solid enough for weathering like bad times or recessions and all that? Because if I'm not mistaken, if you remove like the Bank CTT, you get negative tangible equity.
Yeah.
So I don't know if that's a concern for you. So how do you think about this?
Yeah, I don't really think that's a big concern for me. I actually like, asset-light business models where you don't have a lot of tangible equity, where you can grow without requiring a lot of capital. So I don't think that's a huge issue. Also, if you look at the liabilities, they don't have a lot of financial debt. So the liabilities is mainly lease liabilities, and then it's pension liabilities. And those are like, long-term liabilities that they basically can't default on, at least they don't have any, governance attached to them. So financial debt, they don't really have a lot of. So I think that it's not a big risk for me. And as you said, they have also huge amount of unmonetized real estate on the balance sheet. That's not, I think my calculation, also the company itself put some estimates out that the real estate that sits on its balance sheet at, I think 20 million is worth more than 100. And my best guesstimate from seeing the property and talking to people is that it's worth 200. So at least there's a lot of, tangible equity there that's just not recognized.
Yeah. Sure. And actually, I don't know if it's useful or not, but I think Sonai Sierra, the company that's managing their real estate, is actually probably the best partner they could get on that side. So I think that's a positive. And you were talking about like seeing the properties and all that. So I wanted to get back to the point where your partner actually visited like CTT in Lisbon. And I'm curious to know what key insights did you got from, or obviously your partner got from the visit there, like anything interesting or any story that you would like to share with us?
No, I just think at least Henrik, he got a really high impression, at least from that meeting, seeing the facilities, seeing how everything worked, also seeing how, especially the logistics centers for the express parcels business, how modern they were, like how everything was automatic based. And, it was not like in the mail centers where there's still a lot of manual labor. Here it was really like, it ran really smooth. And then it's just around kind of seeing a management team. Both, I should say, this head of IR, Nuno, there did a really great job, like scheduling meetings, taking us around. That they actually was quite serious in the shareholders. Like we come in and at that point, we only had a small equity stake, but they still, spent 3 days with us and really, shown us the business. And now we are quite large shareholders, so it worked well for both parties. But I think that they took that serious was also kind of a big, something we were quite impressed of. And then I think, just hopefully I can myself go to Lisbon to the Capital Markets Day here. I think they will probably have a new one in September or October this year. But yeah, the feedback at least Henrik gave to me was just like he saw the stores there, those like retail stores where they do the financial service segment, how, the impression we had beforehand was that those were kind of like old logistics where people went in and out with packages, but they were really like clean buildings, where people came in to, buy an alarm or, do like a new bank account, or like it was like, a really good atmosphere in those places.
Yeah, that's pretty interesting. Actually, I have a couple of stores nearby, and from my window, I can see their minivans all over the place. So I think that's a positive sign, I guess.
Yeah, sure.
And would be cool to go to the Capital Markets Day if that happens again, because I do know that 2022 Capital Markets Day was pretty significant because they basically stated all their targets and for the next 3 years or so, and I think they have done a pretty good job at doing it. So now moving on to a bit more into the risk side again. I would be curious to know what was the structure of the DHL deal, because obviously looking at your valuation, it looks very confusing with all those kind of joint ventures and all that. So could you dive a bit deeper into that deal and what can go wrong with it?
So I think the deal, as you said, it's quite complicated, but I think they had to structure this way to, really get the benefits of it. So basically the reason is today that the DHL is really strong in B2B in Spain, but they are struggling a lot in Portugal, especially in B2C, but also B2B, and a little bit also B2C in Spain. So basically the two companies went together and kind of like, okay, how can we CTT do what we're really good at, DHL do what we're really good at, and then really help each other. So basically what will happen is that DHL will transfer their Portuguese, both B2B and B2C, to CTT Expresso. And then basically CTT Expresso will only handle B2B and B2C in Portugal, and then only B2C in Spain, and then let DHL handle all the B2B in Spain. But then there's a lot of like synergies because CTT Expresso is already a highly profitable company, whereas DHL has not been profitable because they, burn money on the B2C side. So kind of attracting that synergies out there, there's a, huge benefit to both companies. So just for example, they estimate that there is split between the two segments, there will be a 35 million euro minimum in synergies. So if you just take 80 million of that and apply that to CTT, then you can kind of see how significant that is. And that's on top of, everything else they can do. Another really interesting point, I think, with this deal is that DHL historically has, DHL is the biggest logistics player in Europe, but historically they have said no to a lot of inbound revenue coming into Iberia because basically they couldn't handle the B2C side. Right. So basically they have a partner in e-commerce player, let's say in UK, that want to send B2C packages to Iberia. DHL before would say, no, we don't want that volume. We only want your B2B volume. But now when they have the partnership with CTT, they can go to all their partners around Europe and say, send everything to us now because now we have a partner that can handle it for us. So I think the revenue synergies is as big as well.
That's interesting. And I saw that played a big part on your kind of valuation, and we can go a bit deeper into that afterwards. So I guess that's truly an interesting deal, and it will be nice to kind of watch the progression of that deal. So long term, obviously, I was going to ask you what was the long term impact, but I guess it's pretty obvious now. And another thing that came to mind when thinking about what can go wrong is like a lot of their volume comes from the Chinese e-commerce platforms, right? So I don't know, like Shine and all that.
Timo,
yeah, exactly. So do you think that's a risk for the long term, or can they strategically kind of shift their positioning if needed?
So I think two plays in that. I think actually the two M&A deals is also significant positive in that regard because first, if you take the DHL deal, that will diversify them a little bit away from the dependence on the Chinese because they get all the inbound B2B from Europe to Iberia that DHL normally can handle. So just that alone will diversify the revenue streams. But then they did the Cacesa deal as well, where they do the customs clearing, especially for the Chinese players. And that actually will strengthen the moat around that business a lot. Because before basically the Chinese players used one company for the customs clearing and then had CTT do the last mile. But by having both businesses, then they get much more attached to those Chinese players. And what is the benefit is they can offer lower prices, but they can also offer faster delivery because now they don't have to have one company doing the customs, then move the volume to the next player to do the last mile. Now they can have everything integrated. So it wouldn't, make it will be much harder for the Chinese players to find someone else that can handle it all for them.
Yeah, for sure. I think that's a pretty good answer because I mean, these e-commerce websites are always trying to find the cheapest kind of provider. So that's why I was asking. And also another thing that my dad kind of likes cybersecurity and does a lot of stuff in that field. So he was kind of telling me, oh, they had some cyber attacks and all that. And I was like, oh, really? I didn't notice that. So I'm curious to know if you think like cyber attacks could be a big risk, especially either for the bank or like just leaking data from the public, because that might kind of put in, I don't know, people might get a little bit concerned. And so how you think about that? And do you think management should be fully transparent with those cyber attacks, or they are actually doing well?
I think they are quite transparent about it, because when we talk to management, we also ask them around those, and basically what they say is that they have never had a cyber attack that has, where the attacker has gotten any access to customer data. And that's where they say, if for some reason the hacker had to get access to the data of the customers, or the individuals, then of course we have to tell the market, and that, because that's a GDPR data breach. But they have never had those. It's been more like single attacks or anything related to the B2B level, and they do take that serious, of course, and try to optimize for that. So that's definitely a response there.
Cool, awesome. That's good to know. So on the management, obviously we already talked about their ownership and all that. So I guess we can just go straight away into like the valuation. I kind of went through your assumptions and tried to understand what's behind the numbers. And what I can tell from your assumptions, it's basically that you're pretty confident that they will be able to grow significantly in the express and parcel, and obviously maybe capture some of the benefits of the new deal with the mail, which will stabilize over time. So you also just published kind of the base case. So what would be your bear case scenario and bull case? Because your base case looks pretty attractive, right? So what would be the bull case?
And actually, if I look at my estimates for the express and parcel business, that's the main driver of the valuation. I actually only use around 10% organic growth in the next 2 years, organic. And they have been growing 50% organic for the last 3 years, taking a lot of market share. So I basically just assume they will not take any market share over the next 2 years. And I actually think that's a quite conservative approach to use, because they are, I actually see more upside to those estimates than downside. But then of course, there could be downside, could be like, let's say, Timo or whatever, but cut the marketing, or there could be a recession in Portugal that people, that would not be anything. That would be like a bear case in that sense that it will maybe take a year or two longer to reach the goals, because the e-commerce adoption will be slightly delayed, but it's not a big factor when the upside is so big.
Okay, nice. And I also had another question on like the multiples used. So you applied like a 13x to the express, right? That should be kind of in line with DHL and all that, but do you think that's realistic multiple? Because obviously DHL has like more history and more mature player and all that. So probably, I don't know, maybe the market might not value them at full price, right? So
but I think at least in my mind, they, if you find another company that's like have a huge moat, it's basically impossible to come in and compete with them in Portugal, at least now. And you sit in a business that's have long secular growth tailwind. So, e-commerce in Portugal will grow at like 10% per year the next 5-10 years. And then you have like basically quite asset-light model, at least, where you lease your centers, you have a lot of like outsourcing. So, if you can have a business that can grow at, double-digit asset-light, like with a strong moat, then you would definitely pay 13 times EBIT for it. So I don't think that's, I think that's, quite cheap multiple.
Okay, got it. Nice. So I think we basically got through all the CTT questions I had for you. And now we can go into the more fun part, which is actually talking a bit more about Symmetry and your work there. I bet CTT is not 100% of your portfolio. No. And so you also mentioned you do short, long, short, sorry. So I'm curious to know what's the strategy there, and overall as a portfolio level, what are you looking for? And how do you think about investing?
So basically, CTT is quite a prime example of what we want to do on the long side. So, find kind of, an uncovered, small cap company in Europe that's, is in some kind of transition with a strong management team and boards and secular trends. And So kind of like a prime example of what we want to do. And then on the short side, we do basically quite the opposite. We find like, broken business models, things that's like, manipulated accounting and so something that, totally, much levered companies. And yeah, we have been quite successful on both sides, but of course we are quite, valuation based on what we do. Yeah.
Interesting. And so I'm curious to know if you short on like pure valuation, or does it have to do you need like a special catalyst?
Yeah, exactly. We don't do any, multiple arbitrage on the short side, like, pair trades or anything. Every short position has to stand on its own and be able to create alpha for us and, independently make money from us. So I think if I look back the last 10 years, I think we have made a little money on the shorts actually as a standalone, despite the market being up a lot every year, basically, since we started. So that's been quite good alpha for us, and it helps us, protect the downside that often happens in those small cap names when there is a market erosion.
Okay. And do you ever do like pair trades? So you basically go long on, I guess, like one of the players and go short on another player in the same industry, or
no, that would really barely happen there. It would be only if we have like, at least an independent view on both legs of the trades.
Okay, got it. Interesting. And like going more into like the position sizing, which is kind of an art, I guess. How do you generally think about it, especially since you have long and short? Like, do you make smaller positions of the shorts, or
yeah? So like a CTT is like a 10% of our WIM, and our largest shorts is like 3 to 3.5. So definitely that's, comparison, we are more diversified there, and we also net long in the market all the time. So we have a long bias on what we do.
And like generally, how do you, like, if you have any opportunity that you're really excited about, like how do you think about the position size? It's always like standard 10%, or
I would say most of them starts like CTT started as a 1-2% 2 years ago, and then as we get more and more conviction, more positive things happen, we can let them grow and become bigger. And also, it depends also on the liquidity in the stock. Ultimately, we have to be able to both get in and get out.
Cool, awesome. And like, probably the last question I have for you on like Symmetry is actually like, what advice would you give to someone probably getting out of university or anything like that that would like to go into the investment career path, so to speak, like, and become probably independent, something like you are doing. So you have your own firm, and you seem to be quite independent with your time schedules and all that. So tell us, what advice would you give to those people?
I think the main one was, as you say, really operate independent, do their own research, talk to a lot of people. But then I would actually encourage people to do like, a podcast like you, or a Substack or a blog or something, and put the writing out. If you find an interesting idea, write it down, put it up to the internet to see. Maybe send it to a few managers you get to know. I have, quite some young people that I talk to regularly that, some of them could be potential new analysts at my firm that, of course they pitch me ideas, and that's kind of a way to build a relationship with a portfolio manager if that's the industry you want to work in. It's also much easier for me to kind of like, if someone send a job application and they say, I'm really interested in investing, can I work with you? I'm then okay, but what can you do? But if someone can say, listen, I really want to work here. You can see what I have written on my Substack for the last 5 years, and I can actually see, okay, is this that strategy? Is this like a type of person to think the right way? And so it's also an easy way for people to do due diligence on prospective new hires.
Nice. Yeah, I think that's great advice, to be honest. And like you mentioned, basically building relationships is one of the keys to achieve what you have. So I'm curious to know what kind of mentors or people you look up to that really helped you into becoming what you are today.
So actually I have a few mentors that helped me start the fund, but they were not investment professionals. So I was like really, really green about, running a fund when I started. I thought I should just be an accountant, and have this small fund on as a side project. So I never really started it with the goal of this should be my, my main income. And then suddenly it was my main income. And then I never had the goal of like, okay, I want to hire 5 people to run it with me. And then suddenly I came there. So I would say my journey was a little atypical there, because I basically bumped into it. I had learned by doing. I didn't have a big master plan when I started out.
Yeah, I think that's the best way to kind of get about things naturally developing. And I guess it's a natural way to not have too high of expectations, like Charlie Munger said. So yeah, that's quite interesting. So yeah, I think we have had a wonderful conversation, and your time is so valuable. So I guess I don't want to take much more of it. So just tell my audience, where can people find you and really see your work, and maybe if they're interested in Symmetry, where can they go?
Yeah, so the main, of course, is our website, www.symmetry.dk. Where we also post research like CTT and other things. You can sign up to a newsletter where we send things out on a regular basis. But then, I'm quite active, or at least decently active on Twitter, or should we call it X now? So I think my handle there is Symmetry_invest. But yeah, that's me. Also, I'm LinkedIn, but yeah, I don't post that much there.
Nice. Perfect. So yeah, thank you so much for agreeing to chat with me, and hope we can keep this conversation going.
Yeah. Okay. Have a time. Thanks for having me on.